Hey, everybody. Welcome to the EPMI podcast. Today, we're tackling one of the most urgent challenges facing businesses navigating tariffs and economic volatility. I'd like to introduce my guests, Chris Muli and Paul Pessutti. Chris, would you mind starting the introductions?
Yeah, thanks, Nihar. Great to see you. Welcome back. Glad that you're back in the fold. It's really exciting to work with you again, and excited to do the podcast. Paul and I enjoyed doing this with you a couple of years ago, so really excited about the opportunity. Chris Muli, I've been with Oracle for a very long time, nearing closer to 30 years than I'd like to admit. I'm a group vice president here at Oracle, running our EPM business, performance management, planning, consolidations, Recs, and tax. We've done core financials and spent some time in the supply chain space, and just happy to be here. Thanks for the time.
Excellent. Thanks so much, Chris. Great to have you. Paul, would you mind introducing yourself?
Yeah, great. Thanks, Nihar. And I echo the comments from Chris. Excited to have you back, and excited to be here with EPMI. So thanks for having us today. Paul Pessutti, I'm the senior vice president responsible for the supply chain and finance business at Oracle. Been in the industry, I think, 32 years now. So yeah, Chris, I think we're getting long in the tooth on this, but hopefully hopefully we've learned something as things continue to evolve here. But excited to be with you.
Excellent. And so today we have a very topical conversation planned. Since Liberation Day in early April, we've seen a dramatic shift in U.S. tariff policy. Almost every country is now facing at least a 10% tariff, with China hit the hardest. The uncertainty and rapid changes that are creating major ripple effects across the economy. And so I wanted to open it up to you, Paul. What do you think is what is more dangerous for global trade leaders right now? And is it the tariffs themselves, or is it the volatility? Is it both? Can you give us some context around the history of tariffs and how that's been changing over time?
I think it's that uncertainty, that lack of predictability, the variability around those that is very concerning. Tariffs have existed, for a very, very long time. This is not a new concept. It's, our customers are used to dealing with tariffs and dealing with regulation as well. So, that's certainly nothing new. I think, just where it's going, how quickly they've been deployed, how quickly that is likely to change, I think is what's creating, in many cases, customers to pause or just to kind of rethink some strategies versus acting. So I do think it's not, certainly we'll see the effect that the large tariffs have on the economy, both on imports and exports. But I do think it's really that variability, the uncertainty of what's coming next, that's most concerning and probably most dangerous to our customers, especially global trade professionals.
Yeah, I definitely can understand that. I mean, we used to, Chris, we've been in the planning space a long time, and our customers deploy 12-month, 24-month, sometimes 5-year forecasts. But they do this process maybe once a year, over a couple months, and there's a lot of input throughout the organization. It is a laborious process. So is that kind of model going to work for us in the future with all this uncertainty, or how do you think the customer should address this?
I think we have to completely rethink how we go about planning in general. It is not a point in time event anymore. It has to be something you're constantly doing. And that, I think, is a little scary for some finance offices because they're used to a cycle of, and a predictable cycle of planning. I do a long range plan, I do an annual plan, I do a monthly or quarterly forecast. But as we're seeing, and as we find with, the uncertainty of the markets in general, even 10 minutes ago, I looked at the markets not doing very well. GDP shrank. Now we've got another indicator to start considering. I think we have to be a whole lot more agile in how we think about the FP&A process. So I think, rolling forecasting and a much more constant approach to how we evaluate and simulate the business for that uncertainty is going to be critical between kind of the winners and losers. In business, we just have to be far more agile than we've ever been, because I think the uncertainty isn't new, volatility isn't new, but our ability to respond and react and simulate and consider is better than it's ever been technologically. Like we can go faster. We do have capabilities to think in the world of AI faster than we used to, and I think that's going to be really key to how customers get through things like this in the future.
Yeah, Chris, I think, I mean, that's exactly right. I think, what you're talking about, that word agility. I mean, to me, like the tariff conversation is really just another disruption, right? That we've seen, many disruptions. And in fact, I often get asked too about it, is this a lot different than other things? But really it's, the new normal is just dealing with constant disruptions and finding ways to kind of mitigate the risk around those and then really become, the word I like to use is resilient, right? It's really about resilience, both in supply chain and finance across the entire organization. And the best way to do that is with agility, right? To be able to make those decisions quickly and based on the latest information that you have. So, I mean, I love that word used with agility, because that really is, I think, the key to kind of, to kind of managing through some of this uncertainty.
Yeah, and so for finance offices, this is a corporate headquarters back office kind of activity where they can manipulate spreadsheets and systems to kind of get a new forecast of their data. But supply chain, in my mind, seems extremely difficult to be able to get new suppliers, get new factories built. I mean, these are multi-year kind of decisions. Paul, how do you see like a complex product like a car or a computer or a chip, crossing borders and, managing all these different implications?
Yeah, I think you're absolutely right. I mean, these aren't things that can happen overnight, right? I mean, you can't just say, okay, all of a sudden now we need to have a factory, onshore to be able to handle all of this. So, these are long-term decisions. We really saw some of this thinking coming during COVID, right? When companies were struggling and supply chain disruptions became front page news. It's kind of a big moment in the supply chain world, right? We finally get on the front page of New York Times. And I think people started to understand what we all do for a living, which was also exciting for me. But I think those are big decisions. I mean, certainly some companies through that time when we were exiting COVID were thinking about, okay, how do I might need to take more of the production into my own hands. I might need to kind of alleviate some of the supply chain disruptions by building more locally. So we've seen evidence of that. A lot of companies have gone to that type of model, but the decisions aren't taken lightly. Obviously, what's been very top of mind is the effect this has on imports, but it also has a great and potentially negative effect on the export market as well. And when you think about items, when you talk about cars and computers and other finished goods, what's also critical is those resources and spare products and components that need to go into the manufacture of all those things as well. We just saw a little bit of an alleviation on the auto parts to try and give a break there. But all the different components that go into manufacturing something, are as much or if not more of a concern than the finished goods that get so much of the airtime. I think in the press.
Yeah, unwinding, 50 years of a supply chain doesn't happen overnight, obviously, right? But there's got to be some kind of redundancy built in to plan for this uncertainty. I didn't want to minimize the finance impact, Chris, but I mean, we talked earlier about currency fluctuations and this kind of being a massive kind of shift in how we look at global trade. What are some of the things that you're seeing that finance offices are going to have to deal with? Because, even though supply chain may be a larger physical task to carry out, it doesn't make finance's job any easier, does it?
No, I think, this is where it's interesting and where I think we have a unique advantage as a company in that we cover all of these domains. And so Paul and I have a lot of really interesting academic conversations about the impact on the finance side and the impact on the supply chain side and the impact on the procurement side and the impact on the revenue generating side of the business. And so I think, being able to have not avoiding stovepiped conversations about just how finance is going to handle or execute against these kinds of exposures or risks or dynamic changes it's not just about the finance, it's about the execution. Paul talked a little bit, you indicated a little bit around sourcing, and supply chain is not just the manufacturer, it's not just the finished goods sale and transportation and tariffing of goods. It's who do I source from? Where do I procure? And so if you look at sourcing organizations, they're being disrupted right now, being asked to look for alternate sources to source more locally relative to where goods are manufactured so they can avoid the tariffs overall. But there's so many different causals, right? And so it's interesting when we talked about tariffs in that, tariffs might be going up, especially in some of our largest trading communities, but that's having an impact. We're already seeing it on currency valuations, and currency valuations have an impact on global trade. So now U.S. goods are going to be, at least in the short term, more affordable overseas. So we can see our exports start to rise and some of our imports start to shrink. And so we see a balancing of trade balance, or a balancing of, trade deficits or trade surpluses, depending on the relationship. And so I think we're thinking tariffs, we're talking tariffs, but tariffs to currency, to overall sourcing and consumption, all the way down to localized manufacturing or staffing, even in the services sector. Like, how do you leverage these different resources appropriately? And it's not an easy answer. There's not a one size fits all. So anyone who says we can solve it for you, keep digging, because there's a lot of work to be done. And I think what we can do uniquely is just have a really intelligent conversation about the different impacts and how you can attack them, collectively, so that you can solve more holistically. Because it is one size is not going to fit all. Not a change in supply chain, not a change in finance. It all has to be kind of considered collectively, in my mind's eye.
Yeah. And so these are probably broader conversations and, like you said, siloed departments. And this direction needs to be coming from executive leadership at these organizations that really have a long-term view of the organization. I mean, if you think about my background is economics when I went to school, and one of my favorite classes was the macroeconomics, and thinking about how, now China's middle class is 700 million people. They can afford a lot more goods than they could 20 years ago, 30 years ago. India's middle class is about 400 million people. And so the fact that we're now more competitive from an export perspective may be a good long-term strategy, but it's going to be painful to get there, right?
Yeah, if you subscribe to that, I don't think the data is there to support that the exports, out of the U.S. will improve given this. I mean, obviously, when you have tariffs, then you have a retaliatory nature coming from the other countries. I mean, the cost of U.S. goods into other countries could be so exorbitant that they don't do well. Most of the exporters I work with do not see this as a favorable thing. So I think it's the jury's out, certainly on all the effects of everything that we're dealing with here. But I do think to both of your guys' points, I think it comes down to, you can make decisions in a silo, just thinking about supply chain or finance or profitability, everything, or even labor and HR and your customer experience as well. You have to bring everything together and kind of have this plan. I mean, this is the way we've architected, obviously, our software forever, is to be more of an integrated platform approach, so different departments can work together in a seamless way. But I think this is proving it out, more than ever, that the companies that are thinking about this as a holistic strategy, and then having the tools and capabilities, technology to be able to work across those silos are.
Yeah.
I think back to your point. I think that's exactly it. We don't know what the actual impacts are going to be. I was reading a paper on the University of Pennsylvania Wharton study on all of this, and it was interesting to read the whole article where they're saying, "Yep, exports might increase," and then, well, maybe they won't. And that's the heart of this entire conversation, to say you have to be able to simulate both. You have to be able to identify different scenarios and then react to it, because there might be a short-term lift and a long-term erosion. And so being able to consider not just near term, but medium term, long term, and then flex based on, as we started, with the changes that are showing up daily. Because again, what might show up today as a very high rate could disappear tomorrow. And so that's an interest, it's an interesting perspective just in terms of thinking about how aggressive should you be in making decisions.
Yeah, and I see some parallels to COVID, although that was a temporary blip. We don't know if this is going to be temporary or long term, but we saw like during COVID, some companies froze all spend as a short-term reaction. Other companies doubled down and invested more. What are you guys seeing with your customers? How are they reacting?
Could I take this because I had a really interesting thought as
Yeah,
we were
please.
talking, and so I did the research. I'm going to read something because you just nailed it, Nihar, which is this is biological. I'm going to cross over into biology. This is fundamentally fight or flight. Fundamentally, at its most basic level, like every company is run by human beings, and human beings have instincts to to fight or to take a big pause, right? It's a physiological reaction to perceived danger. And what are these? What are these volatile activities? They're threats to how we're operating every day. And so there are responses to your point directly to say, and I had a customer do exactly that. We're stopping. We have 92% of our goods are imported from China. We're spending nothing right now. We just have to get a little time under our belt to see what the impact is going to be. We have to see if these containers are going to continue showing up or if we're going to have anything on our shelves to sell. So no, we won't be buying anything else to do anything else at this point. We're just going to stop. And to your point, there are others who are saying, now's the time. Like I really need to lean into doing something because I have to be able to evaluate. So it is an interesting time. And I think we're seeing both sides of the house. We're seeing some stop and some lean in aggressively. And Paul texted me earlier. There really isn't a right answer. There's just what's the right answer for you as a customer, as a business, and maybe there are certain groups or divisions in your company where you're really going to lean in, and others where you're going to step back. So, Paul, I don't know, if you have a comment or thought there.
Yeah, I think you're exactly right. I don't think there's a right answer. There's certainly no crystal ball. Nobody has the answer as to what's going to happen. I think the parallels, Nihar, to COVID are really really good. I think obviously COVID was not an expected event, and we really didn't know when that would end. So we're like, hey, how long is this going to keep going on, right? And here we're in a little different situation, and that a lot of this is kind of we've created this situation, and again we don't know where it will pivot to. I don't think anyone knows that answer, but which leaves customers scratching their heads a little bit. I think you're right, Chris. So a lot are in the let's wait and see, and then others are like, well, I'm going to take more of this into my own hands and kind of approach it in that way. I do think I always view these as opportunities, right, to kind of do things. I mean, it's for the golfers out there, Tiger Woods completely rebuilt his swing when he had just won. Yet the Tiger Slam, right, had won every major, and he went back in and completely rebuilt his swing at the time when he was at the top. So to me, these are opportunities to kind of rebuild the swing, if you will, inside of a company, right? I mean, you could look at the market right now as, okay, we're all looking at our retirement portfolios, and are we going to have to work a lot of extra years? And then there are some opportunistic who are able to that say, hey, the market's on sale right now. I'm going to go make some purchases. So I think there's different ways to look at it. To me, the companies that are able are making investments. Obviously, I'll speak for what we know on the technology side. The companies that are putting in business processes and then marrying that with the technology and AI capabilities in order to be agile, to be able to model these situations. Companies that are able to adapt, that can rethink their business process, that can invest in technology and in platforms that allow them to plan their supply chain, to plan their labor plan, to be able to feed that data into a financial plan. These are the companies that are going to be in the best situation, no matter what's happening disruption wise, in order to take advantage of coming out of situations like this.
So it seems like the underlying theme here is that we know even less after this podcast. However, if we had to give our listeners some kind of a framework to work with, What would you suggest? How do we make this actionable for them? Because I feel like, we can all say we don't know what's going to happen. We don't know what's going to happen, but we still have to take action. So, what do you guys suggest for that framework? Is there a way we can at least think of a mental model and how to deal with this?
Well, for me, it's exactly that. It is to take action. It's not to kind of sit back and wait. I mean, to me, these are again, it's another disruption that we've been facing. Again, tariffs are not new. Disruptions are not new. I think it comes down to thinking about ways that you can reinvent the business process and then apply technology in order to be able to do that. So to me, the key thing is to get started, right? To think about what can we do in this time to create a more resilient supply chain, to create a more dynamic planning process, to be able to account for labor and component shortages. So really thinking through that, and then an opportunity for senior leaders to bring your company together and actually have those strategic conversations and break away from kind of siloed thinking and decision making. This is times like this are a perfect opportunity to kind of rethink the way that looks. And
To Paul's point, it's about doing more, not less. It's about leaning into the disruption, not trying to defend against it. Right? Best defense is a great offense, and I think um, being assertive about how you consider what's happening and planning for as many alternatives as you can. I think, we talk about black swans. No one knows a black swan's coming until it's here, but we all know a black swan's coming. It's just a matter of when, and it's just a matter of what. I won't, delineate them, but just in the last 20 years, we've had 3 or 4 massive, not minor, massive black swans. And it's ironic from this seat that most of the time that's when the questions come like, oh my God, we have to start planning now. I'm like, no, you should have been planning for this 3 years ago. Right. And so when we talk about agile practices, both in technology and in operations, it's about thinking about what you don't expect, which is it's a little counterintuitive, right? But isn't that fundamentally what we're doing from a planning perspective? We're trying to evaluate what we really don't think would happen, but as they say, don't buy a raincoat the day it rains, right? You need to have that in the closet so that when it does, you can just kind of wrap yourself up. So again, lean in, take action, don't wait, because those are the customers, in my opinion, those are the businesses that struggle the most, is those that are looking for an umbrella as the rain comes down on their head. It's hopefully you got that in the closet before the storm hits.
Yeah, I was meeting with a large aircraft manufacturer a few years ago, and they modeled, like 12 scenarios times like 12 different models times 12 different, ways of implementing things. And so you've got an exponentially increasingly high number of what if scenarios. As an engineer, I think we need to apply that mindset to the disciplines of finance and supply chain, right? And plan for all the possible outcomes of a plane flying through bad weather with 700 people on board. It's definitely the technology helps, but the mindset is a differentiator.
Agreed.
So, I think we've kind of come to the realization that tariffs are just a symptom. Volatility is the disease. The cure is agility, the ability to model and act with confidence. So, if you could say one thing that our executive customers could do tomorrow to start thinking about this and being able to build consensus internally across finance, operations, supply chain, revenue ops, give us one thing each that you guys would say would be something that, hey, you guys can start doing this today, and it'll set you at least on the right track going forward.
Yeah, for me, maybe the one word would be to collaborate, right? To collaborate and create a strategy on that, and understand that this is not just that it isn't a black swan, as Chris mentioned. This is just one of many disruptions. It's a perfect opportunity to think about how you bring the company together on a common strategy, updated, modernized business processes, and then having the right technology in order to support that strategy. that you have. So to me, it's a great opportunity to collaborate, break down those silos, understand that, something like a tariff doesn't just affect supply chain or global trade. It's not the global trade people, on the third floor's problem, right? This is a company and market problem. So it's a perfect opportunity, I think, to collaborate and to work together and to break down some of those that siloed thinking. Chris?
Yeah, I think you're dead on. I think if there's one thing we see a lot is that big companies in general are siloed, right? They're large. Every department is large in and of themselves, and I think in cases like this, bringing the teams together more closely so they can talk more holistically about how you react to volatility in general puts you in a better position. It allows you to react both financially and operationally, um, and places you in a position to be the most successful you can be considering the current market dynamic, right? The market could contract. We could have, God forbid, recession, but can you continue to be successful even through that? And can you manage through that? And that requires the collaboration, communication, and alignment across supply chain and finance and HR and RevOps and all of the organizations that run a business. So I think, Paul hit it on the head. We just have to, we have to continue collaborating and staying close across functions, because that's where the magic happens. That's where, the entirety of the business executes more effectively.
Well, there you have it, guys, from the experts themselves. We need to start the thought exercise. Let's embrace dynamic planning. Uncertainty is the new normal, and let's turn uncertainty into a competitive edge. I think that's great advice for all of our listeners and our customers and prospects and folks that are just going through the same thing that we're all going through and trying to navigate this new normal. So thanks, guys, for the time. I really appreciate having you, and we'll see you guys next time.